Hey everybody, welcome back to another video. First off, sorry for missing Monday's video. I had a few things come up which took priority with work, but I wanted to get this video out today for sure because I know I'm getting a lot of questions and a lot of DMs asking about the current market right now and what we're seeing with BTC pulling back. So firstly, if you want to see more technical analysis videos or you enjoy this video, please do hit the subscribe button. It means a lot. We're really close to 1K subscribers, and I might do a big BTC giveaway next week if we hit that milestone. So first things first, let's just take a look at BTC on the macro. So previous all-time highs here. This is probably the most important level for price action since 2017, and of course nowhere near that level right now. So let's take a fib level and let's draw from wick to wick, from the high to the low range we saw in the bear market over the past 2 years. And some of these interesting fib levels are future extensions, which sometimes can be a little bit hit or miss when it comes to TA, but I like to use them anyway because it gives a really good idea of levels that can cause issues when price is in price discovery. And I also like to use, which I talked about in the last video, is the Ganfan method. So we're going to draw a 45-degree angle. If I can find it. There we go. And we're going to get our Ganfan. And even though it doesn't look like it will have a big impact on price, this is a really important level, really important trend levels in the macro perspective. So you can see here, this level is, I can't draw on it, but this level right here is 59,000. So I'll just write that out. And above it we have 64, I believe. Oh no, 72. And let's zoom in. So that's the 1 week. I want to cover this daily chart for us. So first things first is we had a failed breakout of 60,000 just a few days ago on the 14th of March, and then a second failed attempt to break out on the 20th, which is around 4 days ago. This one causing a pretty big wick, and I'm pretty sure if we draw the trend line from the previous high, you can see that it causes this nice range here, which on my low time frame charts was an area I was looking for accumulation. So what we would like to see would be price come up, range in here, and then break out and head higher. But this is not what we saw. Instead, we saw price have a wick above, which if you go back a few videos, it explains well what happens here. But we wick above, which gives new buyers and inexperienced traders the false expectations that price is breaking out, and then we work back below, and then we see a failed support to resistance flip, and back once again 59,000 is acting as resistance, which was the first bearish signal that we saw. If we wanted to stay bullish, we would need to see here a retest. Let me turn this up. We would need to see a bullish support and resistance flip, which would mean this level acting as support. Instead, broke down, up, resistance, and then down, which is a standard support and resistance pattern. So where is price going to find some support? I guess that's the first thing everyone's thinking about right now. So we have a few different levels. We have this range here, which is pretty far away, but something to keep in mind. This is the 4100 to 45,000, sorry, not 4100, 41,000 to 45,000 range. And then above that, we have some decent support around 48,000, which from where we are right now is not too far away. It might sound pretty far, but right now we're at 50,000 anyway, so it's only a 4% drop, which maybe if you're over leveraged, that might be pretty painful, but most people should be in a position to be able to hold that. So then we have another level here at 50k, which psychologically is a level we need to be watching for, because sort of how we have psychological resistance and support at previous all-time highs or previous all-time lows. The market also has a funny way about really putting a lot of emphasis on large numbers, so like 50k, 100k. So 50k is probably where you need to defend right now. Here it was resistance, here it was resistance, and then we had a nice little support here on a lower time frame. And now this is pretty much the first major retest we've seen since breaking out. Because when we had this pullback in late Feb, we never actually broke above the 55,000s with strong confluence. We sort of had this zone here, but price broke down so quickly there was no real time to accumulate and gain some momentum. Now price is above here, this 50,000 level. We really need to see bulls step in here and sort of give us some really strong support on the daily and the weekly close. So maybe we could see a wick down to 48, but we need all closes above 50k to keep any bullish momentum right now. If we see 50,000 or 48,000 start acting as resistance, then this is the second bearish setup, and likely we're going down to like the low 40k region. But right now, there's no reason to suspect that, and things are looking better in terms of support. So 50k is the level to be watching. I also wanted to talk about, in this video, a lot of people seem to be talking about the next super cycle for BTC and how this cycle is going to be different from the last 10 years of price action for Bitcoin. It's sort of a tricky subject to understand, but what people mean when they say a super cycle is that they don't believe there will be another correction for BTC with huge 80% drawdowns, which we've seen periodically throughout history. So we topped in 2013. Let me get my... So this was the top. And we saw around about 80% or 77% drawdown before we started to see accumulation. We also saw the same thing in 2017 with an 84% drawdown. And now, logically, you have some people saying that we might see the same thing again. A strong emphasis right now in the market is that this is going to be a super cycle, which means that there will be no long, drawn-out bear market, and that the bear market will be eaten up by institutional investors and just this onboarding of new users, where we've sort of we've turned the corner, and now we're in that mass adoption stage, which is a tough one. I think if there was no institutions right now, I think we'd be topped. If I'm being completely honest, if there was no institutions, I would probably be out of the market pretty heavily. And honestly, I think that's probably what most traders will be doing. They start to scale out of their positions around here 50, 60k with no institutions, it's going to be hard to drive price. The main things that I think could insinuate a super cycle is that institutions are buying heavily. They are taking BTC into cold storage, and it's in the hands of people who know what they're doing, and they're trying to take the supply out of the market. In the previous two cycles, in 2014 and 2017, the whole run-up was caused by traders who were inexperienced, who felt a lot of FOMO, a lot of FUD. The market was easily swayed by news and SEC regulations and like different things like that. But now we're seeing a whole different style of market where it's very likely that any sort of dip we see below 30 or 40% will be eaten up pretty quickly. And where I'm coming from right now is that, being a trader at heart, I'm just going to keep an open mind to both scenarios. And I think it might be best to cash out whatever you feel comfortable with and leave the rest in the market, because there's no worse feeling than being wrong and going against history. Like we've seen it like 10 years, price action has these huge drawdowns. And until we don't see it, then it'd be a bit foolish of myself not to expect it. We might not see 84%, we probably will not. But even to the previous all-time high, that's a 68% drop from where we are now. And I'm not saying we're going to see that. I'm just saying, give my opinions on the supercycle theory and the sort of theories people are putting out there right now and how I feel about them. So let's take a quick look at Ethereum, because I think it looks a little bit better than BTC right now. So Ethereum on the daily right now, we failed to see a accumulation at above 1,700, and you can see this huge wick right here, which was our bearish signal to exit. And now we are testing this region right here around 1,500, which is a strong level for support. It would make us form a new higher low, and this would be where I'd want to see a bounce up to probably 1,700 or 1,650 again. I don't want price to come down to like the 1,400s from here. If BTC can hold 51,000, then ETH should be able to hold 1,500 pretty well, without seeing too much more downside. You see these large wicks here, so around 1520 to 1480, I would expect huge buyers to step in and defend price action. So we'd want to see something like this on a daily time frame. Close above 1,600 would be great today, but right now a little bit too early to say, as it's early in the day. But yeah, I think Ethereum looks okay. A good chance that we see support and buy a step in here in this region. This Ethereum chart I posted yesterday, and it does look pretty interesting. So this is what we was looking at last Monday, I believe, or a few days ago. We wanted to see this expansion and breakout, which was rejected. We saw our first signal to bearish price action here on this trend line breakdown. Then this trend line in the middle here, which has been previously resistance, was now support, 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 broke. And on that break then, low time frame structure is automatically bearish on anything less than the daily time frame. Now we're seeing, which I posted last night, this low trend line support being retested. It held in late Feb with the BTC crash. It held in early March when we had the second dip, and now we're seeing it tested one more time on the 25th of March. And honestly, it's hard to say. I guess if we keep closing dailies above, then it looks okay. But yeah, I would just be watching this region at 1550 really closely. This wick is pretty scary right here. But I guess right now in this market, as long as we're holding this trend line, you could expect to see some buying, buy a step in and defend price action. Not super bearish. If we saw something like this, that is the the area where you want to be worrying when you see this trend line acting as resistance, because that hasn't happened in a very long time. And if you would like me to tell you where that would take us, probably takes us to here, which is 1350, which I count as the previous all-time high, which we did see on the 22nd of Feb. But we also want to make sure we keep a new higher low on the macro term. So you probably want to see some buying step in around 1400, which is pretty similar to what I just said on the previous chart. Yeah, I don't expect this level to be broken. I'm pretty sure the macro market is still bullish, and I don't think the all-time high will be flipped back into resistance. If it does, then we have a lot more important things to worry about. But right now, like I said, as long as this trend line is holding, I'll keep updating this on Twitter. I see no reason to, I don't know, but as long as this trend line is holding, then no major reason to panic. It would be nice to see some buyers step in over the next daily close and also for the weekly. But that's my analysis right now on both BTC and ETH. Expecting buyers to step in now on both pairings and defend price action going for the daily close. And that's about it.